Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today is a big day for the Ethereum community. We have had the merge announced to be taking place between the 13th and the 15th, and today of course is the Bellatrix hard fork, which prepares the chain for the merge. So still important though, make sure you check your clients if you're running one. Bellatrix is officially activated and the next stop is the merge. See you on the other side. So a lot of exchanges today are pausing Ethereum deposits and withdrawals, FTX. I know there's a whole bunch of these that were doing this. So if you can't get to your tokens for a couple of hours, don't be too alarmed. This is the reason why. We'll do the bull case and then the bear case, and then we'll look at the technicals and how to trade this event. So the thing the bulls are excited about is the triple halving, what's been termed the triple halving. And this is essentially coined from three factors aiming to lower the ETH supply after the merge. Number one, new ETH issuances dropped by around 90%. Number two, staked ETH is locked up for 6 to 12 months. And number three, transaction-based fee burn, meaning that every time you use Ethereum, every time a transaction takes place, a tiny piece of Ethereum will be burned forever. So this is what's being dubbed the triple halving. I've got a clip here to show you why people are just so excited about this.
Is going to happen on September 15th. This is a massive event that will drop the daily number of newly created Ethereum down from 13,000 to 1,300 Ethereum a day, or in other words, dropping the annual inflation rate of Ethereum from 4.3% down to 0.43%. That is a reduction in sell pressure of about $20 million a day, $600 million a month, $7.2 billion a year if we factor in the current approximate prices for Ethereum. The Ethereum triple halving is an event as big as, if not bigger than, the Bitcoin halving in 2024. Get ready for fireworks.
So there you have it. If you're going to be trading and monitoring this event, if you're interested in how to do that, I've got an article here that I will skim over and show you just how you can do this. So Ethereum gone wrong. Here are the three signs to keep an eye on during the merge. And as ETH is transitioning to a proof of stake mechanism, don't think this is without risk, because anyone that thinks that is somewhat ignoring the risk and the effort necessary to move an asset that has $193 billion market capitalization and 400 decentralized applications running on it. So there is plenty of risk here. There are plenty of things that can go wrong. I'm not saying that they will. I'm just saying if you're interested in monitoring it, these are the sorts of things I think you should be aware of. So apart from the 34.2 billion in total value locked in smart contracts, another 5.3 billion in ETH is staked on the Beacon chain. The network is currently used by many tokens, Oracle providers, stablecoins, and layer 2 scalability solutions, as well as synthetic assets, non-fungible tokens, NFTs, dApps, and cross-chain bridges. So this partially explains why the merge has been postponed so many times through the year, and why it's deemed to be the most significant upgrade in the history of the network. So for this reason, 3 different testnets have undergone the merge. We had the Goerli as the latest one on the 11th of August. Curiously, minor issues were presented on all of these testnet implementations, including the Ropsten and Sepolia. One of the devs noted that 2 different terminal blocks and lots of non-updated nodes slightly slowed the process down. And so what should you actually be looking up for if you're going to monitor this, if you want to make sure that your precious Ethereum investment is protected, if you're choosing to hold through this? So the core of any blockchain network is, of course, its blocks. So the first thing is, it doesn't matter what the consensus mechanism is, all blockchains rely on new blocks being proposed and validated. In the case of the Ethereum merge, an epoch is a bundle of up to 32 blocks that should be attested within 6.5 minutes. So actively monitoring the ETH2 Beacon chain mainnet from a reputable source like Beacon Scan or Etherscan or ETHScan is important. So this is the first thing you want to be doing. You want to be making sure that these blocks are still coming out at the right time, with the right heartbeat. You should be looking for red flags on this monitor, and these would present in the form of low voting participation on the epochs, the lack of finality after 13 minutes, i.e. 2 epochs, or the grinding to a halt of proposed blocks. So if you were to see any of this, this would be your first red flag. Something else you should be monitoring is Infura. So Infura provides infrastructure for building decentralized applications, and it allows developers to deploy their solutions without hosting their own full node. The company is fully owned by CoinSensus, which is controlled by Joseph Lubin. According to Infura's website, projects relying on its infrastructure include Uniswap, Compound, Maker, Gnosis, Brave, Decentraland, and MetaMask. So this is the second thing you want to be monitoring, is monitoring Infura's API to evaluate dApps, and in addition, their status page should reliably display real-time updates, considering how closely tied Infura works with the Ethereum ecosystem. And the third thing you want to be watching out for are slashings. So if you don't know what slashing is an embedded penalty designed to prevent attacks. So any validator deliberately misbehaving is slashed, and what this means is a part of their 32 ETH that they stake is removed. It's taken from them. And this is supposed to prevent people from having any incentive to attack the network and incentivize honesty. Repetitive slashes will eventually cause the validator to be ejected from the network. So staking providers and the validator software have built-in protection to prevent someone from being accidentally slashed, for example, if their connection went down. But you really do need to understand this and be monitoring this, because although slashing is standard action of the network as a protective measure, so it should not be immediately deemed unfavorable, but there is a worrisome event that could present, and that would be if hundreds of these validators started being slashed simultaneously, which would potentially indicate that their software is not functioning as it should. So if you start to see a whole bunch of these validators going offline, if you start to see a whole bunch of these validators being slashed, if you start to see any of the above issues with the Ethereum post-merge, then you might start to be doubting your investment, or at least I would start to be doubting whether or not the merge has been successful. Worth pointing out, there are over 410,000 active validators, so even if 20 or 30% of them eventually went offline, the network would still continue as designed. But monitoring slashing is a preemptive measure because it likely indicates that some service, such as hosting a provider, has gone offline, or some incompatibility arose during the merge. So it's not without its risks. The bulls are super bullish because of this triple halving. There are definitely some risks, but of course none of these may present. These are just risks that could present. So it's worth keeping an eye on if you are heavily invested in Ethereum and want to make sure that you are monitoring the merge to make sure that it's all going smoothly. So with that said, there's a lot to point out on the chart from my perspective as a swing trader. So I'm looking at this, and the first thing I see is that we have a breakout. Now, ordinarily in a bull market, every breakout like this is bought, okay? So this would be a long. I'll tell you why it's not, because we're in a bear market. It's also not because this is actually out of sync with Bitcoin. So the Bitcoin 60-day cycle low, first of all, isn't due for another 5 sessions or so. So it could form any time between now and another 6 sessions after this green line. But for me, there's no real price action here to say that we've had a drop into a cycle low. We've gone completely sideways. So I would think that some level of drop, we can form a time-based cycle low, but they are quite rare. So I would think that the first thing to point out is we're not quite there in terms of the timing band for Bitcoin. The second thing is there's massive divergence here. As you can see, for the past week or two, week and a half, Bitcoin has simply gone sideways, whilst Ethereum, in the same time period, has started this kind of pump and seemingly a breakout. So I'm proceeding with caution here because 1, we're not in a bull market. 2, we haven't had a drop into this cycle low for Bitcoin yet, and I would think if Bitcoin drops, then this is going to drop into the cycle low too. So maybe that comes in the form of a retest and then we can go. But for now, I'm not super confident about buying this breakout. The question is, are we going to see a big decoupling? Is Ethereum post-merge going to just start going on a tear and Bitcoin's going to be left out of this rally? Are Bitcoin and Ethereum going to no longer be as correlated as they were? Are they going to go on to do their own two things? Maybe, but that remains to be seen for now. Where is my line in the sand for what if we don't get any of my expected price action? What if we don't drop into a cycle low here? What if we just kind of blast off? Well, if we do, then that's fine, because zooming all the way out, we have this overhead resistance here, and that will be my entry wherever that comes, right? So it's not the end of the world to sit back and play patient and make sure I've got a good read on this. I would like to point out one thing before we move on, and that is if we take this point here, these highs, and we draw a line down here, what you'll notice is there's a good chance that we will run into resistance. Let me just make sure we got this right, yeah. That we'll run into resistance in the not too distant future. So if I reset this chart, it seems more than feasible to me that we could bounce into here, get rejected, drop into this cycle low, and then go. And this was exactly how we set this trade up here last time. We were patient on this. We waited and trusted that the 60-day cycle low would come for Bitcoin, and then we were able to take this long all the way up until we got a trend line breakdown. So I see no reason why we shouldn't stick to this strategy. This is at least my strategy, I should say. This is at least how I'm going to be trading this market. If it turns out that we get a breakout of this line and then a breakout of this line, well, then it's bull market on, right? And we're going way, way, way higher. and therefore we can get some longs out of here or out of here. But for now, I'm going to continue to do the way I know, and that is to play patient and wait to see if we can get a drop into the 60-day cycle low. If we get some sort of price action like this, maybe a bounce off of this line, a drop down into this cycle low, and then go, that becomes an enormous high probability setup for me. So I would be happy to be buying there and long in this and seeing what the market can give. So anyway, that is my analysis of Ethereum for now. I want to be seeing how Bitcoin cycle low sets up. I don't think it's time to be jumping in here, although a lot of people, if you're super bullish on Ethereum and you think that none of these risks are going to play out, and you think that this triple halving is going to have an enormous impact on price immediately, then of course you'll probably already be long on this breakout, targeting new highs. But for me, I think there is a lot of risk. I don't think this is as straight shot as possible. It's also worth noting that we've got a lot of big macro moving events, right? We've got FOMC in a couple of weeks. Before that, we've got the PMI data, and we've got the CPI coming on the 13th. So all of these things could absolutely crush all markets. These are sort of macro fundamental issues that if we get a hot CPI print and the Fed basically confirms going to continue to hike rates into a slowing economy, if we start to see all of that, then you best believe it's going to get very bloody out here very quickly. So again, for me personally, experience has taught me not to jump in front of any trains, not to try and be a hero, or just wait for clean, clear technical breakouts, and then I will be swing trading them. There's no problem, because even in the worst case scenario, it pumps all the way up to here and then breaks out. We only have to wait a week, right, before I get an ultra high probability entry, targeting absolutely massive upside from here. So a little bit of patience will certainly pay off. I'm going to be continuing to play patient. So that's my analysis of Bitcoin and of Ethereum. I'm waiting to go long, but I want to see it drop into a cycle low, or at least a meander out of here and then a pump. We get a pump anytime in the next week or two, particularly if it was to coincide with a lower CPI print or a dovish tone from the Fed, then I think it's game on. We can call this the absolute bottom for Bitcoin, and we can start targeting new highs. But of course, the converse is true as well. The Fed is still capable of blowing up markets. Inflation and CPI is still capable of coming in high, and all of that stuff could be incredibly detrimental. So it's best not to preempt this stuff. It's best to play it patient. So anyway, that's my analysis. Still some risk overhead, still some resistance overhead, but patience, as it always is, will be rewarded. So if you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. If you want to see how I trade with these markets in real time, if you want to see how I'm going to be dealing with this over the coming days and weeks, then make sure you hit that subscribe button, turn the notifications on. Follow me on Twitter, because I will be updating any entries and exits of stuff on Twitter. And until next time, all the best from me. Take care. Cheers. Bye.